Welcome back. It is great to see the stock rally continue into Wednesday, November 15th. We are up again on the S&P, the Dow, the NASDAQ, even the Russell 2000. And the reason for it is we had a retail report that came in better than expected. We were expecting retail sales to come in month over month, down 0.3%, but instead the reading was at 0.1%. That was a bit of news that gave the market a good reason to run up a bit. And what's interesting is that the Russell is trading ahead of the S&P, and it's been trading ahead of the S&P for the last 5 days. I'd like to show that to you. As I record this video, looking at the S&P, it's up 0.28%, but it's on a really good rally for the last 2.5 weeks. The Russell has been outperforming the S&P this week. And what that means is the S&P has every stock, in the first 500 index, but it's heavily weighted on those magnificent 7 stocks. For example, Apple is nearing a $3 trillion valuation. Microsoft's at $2.75 trillion. And all these big valuation stocks, that was making up most of the S&P gains earlier this year. And I'll show that in a chart. But the Russell is made up of 2,000 stocks, and you're seeing more mid-sized companies be reflected in that number. So it's interesting to see those mid-cap companies really begin to rally ahead of the S&P. Let me compare the S&P versus the Russell. The Russell's in yellow and the S&P's in blue. At the beginning of the year, they were kind of mirroring each other. The Russell was a little ahead, but then at a certain point, the S&P really separated itself from the Russell, and that's where the magnificent 7 stocks just started gaining such value, and it stayed ahead of it. But let me kind of look at the last 5 days, and you can see that the Russell's really advanced ahead of the S&P. I think that's overdue because you saw the big run up on those big mega cap stocks, and they don't have a lot more room to go. The rule of large numbers is it's very hard for a $2.75 trillion company, as an example of Microsoft, to go up 10%. That's $275 billion of market cap. But a small mid-cap company, let's say they have a $10 billion valuation, 10% to them is $1 billion. So that type of growth is not that aggressive if you consider that market cap. So I think it's a pretty interesting time that I think that the Russell 2000 small and mid-cap stocks have a lot more room to go up. And I'm glad I've owned stocks in that space. One of these small cap companies that I'm going to highlight is Enphase. It was up big yesterday, up 15%. And it's up again today, 2%. Overall, over 5 days, it's up 20%. So this is a small solar energy technology company. Its market cap is 12.76 billion. So it could go up a lot without it really being noticed within the S&P. I don't think it's an S&P component, but within the Russell 2000, it's stocks like these that are really making a big impact on that valuation. The other example is Airbnb. It's a little bigger. It has a market cap of $83.75 billion, but it's up 9.22% in the last 5 days. It had a great day yesterday. It's having a good day today. And year to date, this stock is flying. It's up 52.44%. So a really nice mid-sized company that has really good growth. And the last example would be a bank. This is US Bank. This is a mid-sized bank that has a market cap of $57.6 billion. It's up 13.5% over the last month. In the last 2 days, it's up 6.59%. So mid-sized banks are really rallying as well, which is really good to see. And this stock pays a 5% dividend. So there's a lot of value out there in the market if you look for it. There's always discounted companies, and it's great to see this rally extended, one more day. I think for the rest of 2023, I expect the rally to continue. There's no news out there that I foresee that's going to kind of smash this party and make it come to an end. So anyway, I hope you enjoyed this update. Good luck investing out there.